Okay, let's unpack this. AI, artificial intelligence. It feels like you just can't escape it right now, can you?
Not at all. It's everywhere. Headlines, industries.
Yeah, popping up in our daily lives, too. It really is the big tech story.
And that level of buzz, it naturally brings up a ton of questions.
Especially about money, right? Investment.
Exactly. Like, where's the real economic opportunity here? How do you even start to figure out investing in something moving this fast?
Totally. So for this deep dive, we're going to zero in on that. The booming AI market, specifically looking at it through the lens of potential stock investments.
Okay.
We've got a source. You shared an article from The Motley Fool. It's dated June 9, 2025.
Right. And it looks at what they're calling some of the smartest AI stocks to maybe consider right now.
So our mission today is to really pull this article apart.
Yeah, dig into it. What's the core message? What are the facts they're presenting?
And figure out what it means for you, as someone trying to make sense of this whole space.
What's the source actually telling us about how fast things are growing and who the key players might be, according to them?
All right, let's jump in. The landscape first. What's the big picture the article paints for the AI market?
Well, the picture is basically one of explosive growth, huge scale.
Huge scale meaning?
The source stresses we're talking hundreds of billions of dollars already at stake. It's not some future thing. It's massive right now.
Hundreds of billions.
Yeah.
That's kind of hard to grasp. Does the article give specifics on where that money's actually going, especially from big tech?
It does, yeah. And that really highlights how much cash is being poured into the foundations of AI.
The infrastructure.
Exactly. The article says big tech companies are expected to spend, get this, $325 billion this year alone, 2025.
Wow.
On AI tech, data centers, all that underlying stuff.
$325 billion just this year. That sounds like a massive jump.
Was it last year, did it say?
Yeah, the source puts the 2024 figure at $223 billion.
And that's over $100 billion more in just 1 year. That's right. That increase alone tells you pretty much everything about the pace,
And the article doesn't see this slowing down.
No, not at all. It projects significant growth for the whole AI market right through the end of the decade, and probably well beyond that.
So, definitely not a fad.
The source emphasizes it's a long-term shift.
Okay, so huge market, growing incredibly fast, fueled by just, frankly, mind-boggling investment in the tech underneath.
Right.
When things are this hyped, it can feel, overwhelming to figure out where the actual investment angle is. Does the article offer any sort of guiding idea?
It does, actually. And it's kind of an interesting take, maybe a bit counterintuitive when everything's focused on the flashy new apps.
Okay.
The article basically suggests that sometimes the most obvious investments might be the smartest ones.
Obvious how?
The companies providing those fundamental building blocks, the infrastructure we were just talking about.
So like the picks and shovels of the gold rush kind of thing.
That's a great way to put it. The critical stuff everyone needs, no matter what specific AI tool they're building on top.
Gotcha. Okay, let's dive into those specific players the article highlights then, based on that idea. First up, a name everyone links with AI horsepower. Nvidia.
Yep. The source still calls them the king in a really vital area.
Which is their GPUs, right? Graphics processing units.
Exactly.
For anyone maybe not deep in chip tech, why are these GPUs so critical for AI right now?
Well, think of them as these specialized chips. They're incredibly good at the kind of math AI needs, running lots of calculations at the same time. Parallel processing.
Okay.
They're basically the engines powering the data centers that AI relies on. And the demand for that power is just immense.
And the article gives some pretty vivid examples of just how intense that demand is, sort of the battle for these chips.
It really does. It points to big tech companies basically fighting to get their hands on as many GPUs as they can.
Like who?
Well, the standout example is Elon Musk's xAI. Their plans for a supercomputer, starting with 100,000 units.
100,000 Nvidia GPUs.
Yep. Planning to double it to 200,000. And there are even rumors mentioned about potentially scaling up to 1 million units eventually.
1 million?
Yeah.
For one project. That really puts the scale in perspective.
It's absolutely staggering demand. And it's not just xAI. The source also mentions projects like Amazon's new data centers. Billions of dollars, needing thousands and thousands of GPUs.
So the demand is just off the charts.
Enormous.
Yeah.
And the source makes a point that it shows zero signs of letting up.
And I assume you see that demand translating directly into NVIDIA's numbers. The financials the article cites for their latest quarter Q1 fiscal 26.
Oh, absolutely. Their data center revenue, that's the key AI segment, it grew 73% year over year,
73%.
reaching $39 billion just in data centers.
Wow.
Overall, the company's total sales hit $44 billion. That's 69% growth year over year.
69% growth on $44 billion in sales. That's incredible scale. What about their forecast the next quarter, Q2?
For Q2 fiscal 26, they're expecting $45 billion in sales. Now, that's a 50% increase year over year. And the article is careful here. It notes that, yeah, the percentage growth is lower, but that's because the base number is so much bigger now.
Right, law of large numbers.
Exactly. It still means they're adding something like $15 billion in sales compared to the same quarter last year. The dollar growth is still massive.
Okay, so demand is real, the results are backing it up, the dollar growth is huge. How does the source talk about Nvidia's valuation? Is the stock seen as expensive now?
Well, it notes the stock's currently trading with a price-to-earnings ratio, the PE, of 46.
Which means?
It's just a way to see how the stock price compares to the company's profits. The article points out that 46 is actually well below Nvidia's 3-year average PE, which was 80.
Oh, interesting.
And if you look forward, based on estimated future earnings, that PE ratio drops down to 34.
So the argument in the source is that relative to its own history and its future earnings potential, the valuation might actually be reasonable, even after the big run-up.
That's precisely the take. The source concludes pretty clearly on Nvidia. Demand isn't slowing, the results keep dazzling, and given that ongoing demand and growth, the stock seems likely to keep outpacing the market.
Okay, that covers the hardware layer, the processing power. Let's shift to the second company the article focuses on, Amazon, which, most people think of for shopping, but here it's about a different critical piece of the AI puzzle.
That's right. The focus shifts entirely to Amazon's role as a giant in cloud computing, specifically Amazon Web Services, AWS.
And why is the cloud, and AWS in particular, so fundamental for AI, according to this source?
Well, the article identifies one of AI's biggest challenges as just dealing with the data. Managing it, processing it, keeping it secure. We're talking massive amounts of data.
Right, you need somewhere to put it all.
Exactly. Training these models, running them. It needs not just the processing chips, but also vast, easy-to-access, secure data storage and all the services around that.
And AWS is the big fish in that pond.
It is. Largest cloud provider globally. So the argument is, because AI absolutely depends on these data services, providers like AWS have this huge runway for growth, directly fueled by companies adopting AI.
And AWS is already a massive profit center for Amazon overall, isn't it?
Huge. According to the source, it accounts for the lion's share of Amazon's profits.
How much?
63%. 53% of Amazon's $18.4 billion in operating profit in Q1 came from AWS.
Wow. So even with all the retail and everything else, AWS is really driving the profitability, especially for that B2B tech spend.
Definitely the core engine there.
Okay, let's look at the AWS-specific numbers from Q1 that the article cited. How did it perform?
AWS sales hit $29 million. That was up a solid 17% year over year.
17% growth is strong for a business that size.
It is. And maybe more importantly, the operating margin, basically its profit margin before interest and taxes, was an impressive 39%.
39% margin.
Yeah.
That's very high.
Yeah, the article notes that really shows their pricing power in the cloud market.
Okay, so strong growth, very profitable in the cloud segment, clearly benefiting from these AI tailwinds. What about Amazon's overall picture in Q1?
Well, overall, Amazon saw a 9% total sales growth. Revenue reached $156 billion for the quarter.
Still massive numbers.
Oh, yeah. And net income saw a really big jump compared to last year, up to $17 billion from $10 billion in Q1 last year.
Nice increase.
And the article also pointed out other strong areas, like digital advertising. That grew 19% year over year, bringing in $14 billion in Q1 sales.
Okay, so pretty solid across the board, but AWS is clearly the standout high-margin piece directly plugged into the AI build-out. How does the source view Amazon's stock valuation?
The article describes Amazon's stock as having been, historically maybe undervalued or at least fairly valued. It suggests it's still on a generally upward path.
So the idea is the market hasn't fully priced in the AWS strength.
Kind of. The view seems to be that the strong results, especially the profitability and growth from AWS, driven by things like AI, are just too compelling to ignore.
And the source's bottom line on Amazon?
Their take is pretty straightforward. AWS is perfectly set up to thrive in this age of AI, and as AWS thrives, so will Amazon overall. It's framed as an excellent opportunity tied right into that foundational need for cloud and data services.
Right. So Connecting those dots then, the article sees both Nvidia and Amazon as these titans,
Yeah,
both benefiting hugely from AI, but in different ways.
exactly. Two sides of the same coin almost. NVIDIA is providing the raw compute power, the hardware foundation.
Engines.
Yeah. And Amazon, through AWS, is providing the data infrastructure, the storage, the management, the access layer.
The fuel in the roads, maybe?
Something like that, both providing absolutely critical pieces that the whole AI ecosystem needs to actually work at scale.
Okay. Does the article mention any, potential roadblocks or things to watch out for, external factors?
It does touch on that. It specifically flags broader economic policy. Things like tariffs could be a wild card, something to keep an eye on.
Yeah.
But the source also notes that, the economy overall has been proving pretty resilient lately.
And looking past any short-term bumps, what's the long-term view presented?
The article positions both companies as really solid long-term investments. The thinking is that the underlying AI trend driving demand for what they do is so strong.
That it'll likely outweigh temporary issues.
Exactly. That they'll appreciate significantly long after things like tariff debates have faded.
Now, there's one important piece of context the source itself provides, and it's good for you, the listener, to know about. Its own affiliations.
Absolutely. Transparency is key here. The Motley Fool article is upfront about it.
What does it say?
It discloses that the author, Bradley Bouchard, actually owns Amazon stock personally.
Okay.
It also notes that John Mackey, the former CEO of Whole Foods, which Amazon owns,
Right.
he's currently on the Motley Fool's board of directors.
Okay. That's a connection.
And on top of that, the Motley Fool itself, as a company, holds positions in both Amazon and Nvidia and recommends them.
Right. That context is definitely valuable. It doesn't automatically mean the analysis is biased or wrong, of course.
Not at all. But it gives you the full picture, helps you understand the potential lens, through which this perspective is being offered.
Good point. Okay, so let's quickly recap this deep dive. We've looked at this picture of an AI market just booming, driven by truly massive investment in the underlying infrastructure.
Right. Hundreds of billions being spent.
And we explored why this particular source singles out Nvidia and Amazon as maybe the smartest plays right now.
Not necessarily because they're building the flashiest AI apps,
but because they provide the essential foundations. Nvidia with the hardware, the processing power.
And Amazon with the data services, the cloud infrastructure through AWS, the layers everything else relies on.
Two different but totally interdependent pieces of the puzzle that this source sees as really compelling investment opportunities.
That sums it up well.
Okay. And that brings us to maybe a final provocative thought for you to consider as you process all this. When we look back at huge technological shifts, think the start of the internet or the mobile revolution, and now AI, where does the really enduring investment opportunity tend to lie? Is it usually in those flashy consumer-facing products that grab all the headlines, the cool new apps everyone's talking about? Or, as this source seems to suggest with Nvidia and Amazon, is the real sustained leverage often found deeper down, in the less visible, maybe less glamorous, but utterly essential infrastructure? The plumbing, so to speak, that makes the whole revolution possible.
That's a great question. Is it the surface or the foundation?
Something for you to chew on.